from yesterday and certainly from last week. In terms of breaking down movement in the market this morning, joining us now is Thomas Hayes, chairman and managing member at Great Hill Capital. Thomas, good morning. Always good to talk to you and get your insights on the market. And what a day to have you kind of, bounce in here with us as the markets are looking to bounce back this morning. What are you seeing in terms of what is the catalyst behind this bounce back?
Well, the number one thing, Alicia, and always great to be with you, is Charles Evans getting on TV overnight and saying he was getting nervous that the Fed was moving too quickly. And I think this is the most obvious thing anyone could see. If you look back at the Federal Reserve's policy mistakes of the last few years, it's unprecedented in the 110-year history of the Federal Reserve. I mean, first you had Powell come into office. December 2018, he decided to say quantitative tightening was on autopilot, and he crashed the market 16.5% in his first couple of weeks. Mnuchin had to call 6 banks to bail him out with a liquidity facility, and the market was off to the races to new highs in the next 3 months after Powell walked back the disadvantageous comments, we'll put it politely. And then last year, if you looked at just a year ago, September 2021, you had GDP estimates for this year at plus 3.8%. You had PCE inflation over 4%. And they thought that inflation was transitory and it would be a good idea to keep the Fed funds rate at 10 basis points. Fast forward today, with the economy collapsing, GDP estimates now at 0.2%, inflation rolling over, they think it makes sense for the Fed funds rate to go to 4.6%. So you can't make this stuff up.
And speaking of you can't make this stuff up, I think I hear you saying essentially you're not a big fan of the way the Fed is reacting right now. What's your top line, concern in terms of, Fed activity and specifically a more aggressive Fed, at least the last rate hike? I know we have Evans, the Fed president in Chicago, coming off a bit dovish relative to the latest kind of Fed action.
Yeah, you're going to see a lot more of that, Alicia. Winston Churchill said generals are always prepared to fight the last war. That's what they've been doing. It's been like a dog chasing his own tail. But I think right now, when you look at Italian yields now at 9-year highs and the ECB having to go back with quantitative easing and things starting to break, the U.S. dollar moving parabolically, the British pound and the euro collapsing, Powell and company are going to have to walk back their hawkishness relatively quickly. And there are 3 reasons for that. Number one, inflation is rolling over. Lumber prices are actually lower than they were pre-pandemic. The rest of the commodity basket is rolling over. People are seeing it at the pump. These policies work on a lagged basis, and you have to give them time to work. We've had 86 hikes since 1983. 75 were 50 basis points or less. They just did 3 75 basis point emergency hikes, and they're not willing to wait a few months to see how it works out. It's completely beyond me. Every 1% hike adds $285 billion to the federal deficit each year. Jay Powell wants to be Paul Volcker. Paul Volcker was raising when debt to GDP was 30%, not 122%. So they'll definitely have to walk this back.
Hey, Thomas, you just mentioned in there Powell's going to have to walk back a bit of the hawkish stance here. Can you give us a little detail? When do you think that starts? What do you think it looks like? And what do you think it's going to take for him to really pivot on that?
You saw a trial balloon by Evans overnight. Powell has a prepared speech tomorrow, so we'll see if he uses that opportunity. But eventually the credit markets force their hands on politicians and policymakers who think they know better. And we're already seeing credit markets seize up. It's difficult for governments, municipalities, and companies. It's going to get harder and harder to refinance if they don't walk this back sooner. And like 2018, they will have to pivot. They will have to roll it back. So either they do it proactively and use, read a history book, or they do it reactively when the markets force their hand. And you're starting to see some things getting close to levels of breaking, and it's usually at that point when they have to pivot. So now, I've gone with the bad news of what they've done wrong, but let me tell you what they've done right. Their talk hawkish and act dovish has been very successful. Yesterday alone, inflation break-evens were down, 5-year inflation break-evens were down to 2.38%, down from 3.59% in March. So they are anchoring those inflation expectations with all the hawkish talk. Keep up the talk, but don't go too much on the actions or you're going to start to break things, is our general view.
Thomas, I know you're not a big crypto guy, and I've only got like 45 seconds here, but so I want to get your take on the crypto market right now, the reaction that we're seeing. I mean, crypto over the last week or so has broadly outperformed kind of the greater market movements that we have seen, and even today, still outperforming even a bit of the bounce back. What are your thoughts in the crypto space and the reality moving forward, especially as the regulatory environment is improving?
Yeah, I think if the Fed pivots, crypto will get a bid. But, the tenets behind, Bitcoin as a hedge against inflation, it's been the worst hedge against inflation. As inflation's been its highest in decades, Bitcoin has underperformed. Is it a store of value? It's down 60 some odd percent. And is it scarce? I don't know. There are unlimited tokens being developed every single day. So I would say this, if you see the Fed pivot in coming months, Bitcoin will certainly get a bid for now. The question is, what's the long-term value? And I'll leave it to your viewers to decide on their own. For us, we like to invest in cash-generating businesses that we know are generating cash flow, that are productive, and we keep it simple in that regard. But for some people, the higher risk profile and potential returns are attractive, and many people have done well over the years. So we keep an open mind.
That's a fair take, Thomas. As always, so good to have you on. Thomas Hayes, Chairman and Managing Member at Great Hill Capital.
Thanks, Alicia.
All right, crypto.